Let's bring in our first markets guest for the hour. We got John Petrides, who's portfolio manager at Tocqueville Asset Management. John, it's good to talk to you today. We're seeing a rally in the markets right now. The Dow up 200, the NASDAQ up 250 points. How much of this you think is around the expectation that, to Janet Yellen's point in her confirmation hearing yesterday, that this administration is going to go big on stimulus? How much of it is really about the focus back to the fundamentals and earnings?
Yeah, I think a primary reason, I've actually been amazingly very surprised by how the market has really brushed aside all the political issues that we've had since in the first 3 weeks of the year. I would have assumed coming into the year that had the Democrats swept the Senate, the House, and won the presidency, that the markets would have sold off on the back of potential increase in the corporate tax rate in the future, as Biden's already laid that out. And then you had the surge on the Capitol. The market has brushed that aside. So clearly, I think investors are focused on the short term and Biden's go big policy on fiscal stimulus, which is clearly much needed as the COVID case continues to rip through the U.S.
You know, John, we know that former President Trump liked to talk often about the stock market, how well it was doing on his watch. And he spoke today at Joint Base Andrews about how he, in essence, set now President Biden up for success because he's handed him, a great foundation when it comes to the economy. I want you to listen to what he had to say last night regarding some of the things he believes were things that he wanted to shed a light on during his presidency.
Income soared, wages boomed, the American dream was restored, and millions were lifted from poverty in just a few short years. It was a miracle. The stock market set one record after another with 148 stock market highs during this short period of time.
And then today he talked about being careful because the Democrats might raise taxes on us all. But here we see that the market is reacting quite positively to the Biden administration and a Democratic-controlled Congress. Are you surprised by the enthusiasm we're seeing? I mean, it is day one of his presidency, but are you surprised by the level of enthusiasm, John?
I am a little bit surprised by it, to be honest with you. But again, I think the market is focusing very much on the attention that's giving to the consumer and into the U.S. citizen of sending checks directly to the household to boost the economy, something that we need here as we muscle through as the vaccine gets rolled out. You know, I think President Trump's speech is the speech he would have liked to have given had COVID not happened. I mean, in February, we had a very strong economy. We're unemployment rate of 3.5%. Stock market was at all-time highs. And then COVID did happen and derailed everything. So I kind of think that's the speech he would have liked to have given today. But clearly that didn't happen. And, I think, again, I go back to the fact that COVID is not going to pay for himself. I do think Trump's comments on increasing taxes is going to come through. I think Biden really has a 2-year window here until, I don't want to talk about the next elections, but in 2022, we will have congressional and Senate elections. And the margin is so thin in the House and in the Senate that you could sway, the Congress could be swung either way. So I think he does have to push through his corporate tax increase sooner rather than later, which again will be a headwind for stocks. But again, the market is seemingly not paying attention to that yet. So as the drum gets pounded louder on increased taxes in the future, I do think that will cause more volatility into the stock market. But until then, with bond yields at historic lows, and we're hopefully getting a light coming out of the tunnel on COVID, and there's money market funds are at all-time highs, investors will want to put that cash to work and not earn 0% of it sitting in the market and ultimately getting chewed away by inflation. So I think that's why you have animal spirits coming to the market and embracing stocks on the dip.
And John, really quickly, shifting our attention away from politics, we're, of course, in the thick of earnings season right now. Jared alluding to some of the big banks that have reported so far. We saw Netflix up in a big way on the back of their numbers. What's the headline that stood out to you so far in the reports that we've gotten?
Well, the banks kicked this off. And what I appreciated most and looking for most coming out of all the banks' earnings is, by and large, their loan losses were less than expectation. right? And that's a really good sign, in my opinion, of how the consumer is battling through this current environment. And if you inject another $1,400 into many households around the U.S., they can use that to, again, further up defaulting on other loans. They can pay down credit cards. So the fact that the banks are not deteriorating, or their loan books are not deteriorating as much as investors had expected, to me is a really, really good sign.
Okay, thanks so much for that, John. Always good to get your insight. John Petrides, portfolio manager at Tocqueville Asset Management.